What is up, traders? In this video, I'm going to be showing you a trading system, a trading process that helped me bridge the gap between consistently losing money and consistently being frustrated in my own trading to consistently making profits and becoming a professional trader. The same process and system has helped hundreds of our clients do that same exact thing. And in this video, I'm not only going to be sharing the technical analysis behind this system, but also conditions. I'm going to give you some possible entry reasons, stops, and targets that you can use. And most importantly, I'm going to be sharing with you how you can actually verify this system yourself and create a trading plan around it. Now, I'm doing all of this because throughout 2019, it is my main goal to create 1,000 profitable traders, and I want you to be one of them. So if that sounds good, make sure you hit that subscribe button down below the video to the right-hand side. Click that like button for me. Follow us on the socials. Links are in the description, and I will see you directly after the intro. Welcome back, traders. The first thing we will do is talk about the trade you see on your screen that banked in a little over 300 pips, as you can see here. Now, this trade was based on the exact system I'm going to be teaching you today, which is why we're going to be talking about it and the technical analysis behind it, along with the entire system we used. And I'm going to be teaching that system to you as we talked about before the intro. But beforehand, just to show you that this was not in hindsight, we actually trade based on this. I'm going to show you the Pro Trader report that was sent out about a week ago. We send this to traders involved in the Pro Trader report every single Monday. And as you can see, this Pro Trader report, if you'll read along with me, says here on the Euro New Zealand, this bear has been in a nice uptrend and is currently trading above the EMA 50 EMA, but is heading back down to the most previous level of structure resistance that was broken in the green zone. We talked about this. If I zoom in on the chart, you can see that this green zone is between 1.6961 and 1.6911. We go back over to the chart. What is this zone in? 1.6961, 1.6911. So as you can see, we actually sent out this alert on a Monday, and now this market came down into that zone and pushed up over 300 pips from the zone that we alerted, showing you that that's not in hindsight. Now, before we get into the system itself, just for those of you who are new, let me explain what a system is in trading. So a system consists of, that's a huge Y, a system consists of three different things. What we have in a system is we have conditions. We're going to just label these very short. We have entries, and we have stops and targets. This is all a system, a trading system, a trading process consists of. Now, conditions, we've all heard the saying, when the stars align. When the stars align means the perfect situation. So conditions are going to give us our perfect trading situation. They're going to be when the stars align for us to have a perfect opportunity to actually make money, to actually make a profit out of the market. Conditions equal stars aligning. Just keep that in mind. We're going to go through this rather quickly. The entry reason is going to be our trigger. So our trigger to actually enter the trade and place the trade itself is our entry. That can be done with candlestick patterns, with price action patterns of any kind, with indicators, and we're going to talk about a lot of options there in just a second. And then stops and targets, you're going to have preemptively before you place the trade, set in stone stops and targets for that trade. So this is a trading system. Now, let's talk about the trading system itself that we used here on the Euro New Zealand that you're going to learn the full system of today. So the trading system we used is something I call OTZ, which is an optimal trading zone. And the definition of that optimal trading zone is finding a trending market. Now write these down. This is going to be the beginning of the conditions. This is going to be how we make the stars align to give us the best potential trading opportunities. Stars aligning is going to be our conditions, and our conditions start with the daily chart must be in a trending situation. In our case, an uptrend in this specific scenario, and this is applicable on all time frames. I'll get into that a little bit later, but for this case we use the daily time frame for our condition of trend. How do we know any chart is in trend? Well, we want to see at least a 1 2 3 move. We have this push up 1 2 3. Once we get our 1 2 3 move, we know that we have a trending market. Now once we have a trending market, that's condition number one, trending market on our higher time frame, in this case the daily. Condition number two is we want to point out a zone in the most recent level of structure that was broken. If we do our 1 2 3 at any time once we get the third impulsive move up, our second, our number 2 right here, the high of our second is going to be where we point that zone out. So what I do is just a few pips above the wick of that area and a few pips below the body of that high. And I hope I'm not going too fast for everybody. We have our 1, 2, 3 move on our daily chart. We look for the most previous level of resistance or support if we're going down that has just been broken. In this case, it's resistance. We go a little bit above the wick of that resistance level, a little bit below the bodies of the candles at that resistance level. And in that case, we create this zone right here. This is what we call the optimal trading zone. That is condition number 2, create the zone. Now, condition number 3 is the market must pull back into that zone. Those are all of our conditions. I hope you have them written down. If not, rewind the video and make sure to write them down. That is all the conditions we need to make the stars align. Once the stars align, we drop down to a smaller time frame. In this case, I'm going to drop down to the 4-hour chart. We currently have the stars aligning by having a move that broke a trending market on the daily chart that breaks above that resistance level. We have our resistance level pointed out with our green zone, and we have a pullback into that level. That means the stars have aligned. Now, what do we do after the stars align? We look for our entry reason, and you can use, again, I'm going to give you a lot of different options for entries because there's not like a greatest entry reason in the world. Whatever you want to test throughout the markets is perfectly fine. Let's look at this though. In this case, when the market got down into our zone, when the stars aligned, we ended up with a nice cluster of hammer candlestick patterns, a nice cluster of candlestick patterns with long wicks to the bottom side that would have given a good opportunity for entry. We also ended up with a nice engulfing pattern right here at the bottom. Another possible entry was a big momentum candle with a low lower than almost all the previous candles, and then a high that closed above a high and a close above those candles. That's what we call a momentum candle. Any of those would have been appropriate entries. It just, you're going to understand this later on. It just depends on what you decide to take and test throughout historical data. But those are all entry reasons you can use. And if you want to have more confirmation on that entry reason, you can do something like, I'm waiting for, let's say, a hammer candlestick, and then I'm waiting for the market to trade above by 5 pips that hammer candle. So what you would do in that case is every hammer candlestick you see, you would place a buy limit order right above the high of that previous not shooting star, excuse me, I'm stumbling over words here, that previous hammer candle. So if that hammer candle's right here, you'd place a buy stop above that hammer candlestick if you wanted to have an extra confirmation on the entry. Aggressive traders may opt in to just trade immediately after seeing that hammer candlestick or this engulfing bar. But in the engulfing bar case, if you wanted added confirmation, you could wait for that engulfing bar to form and then place an entry a few pips above the high of that candle to make sure the market actually trades above it to confirm that it wants to go higher. You could also wait on a close above any of those candlestick formations as a possible confirmation. And if you want to be very conservative, you could wait on, let's say, a double bottom in this area, an actual price action pattern, head and shoulders pattern on even lower time frames. Those are all possible entries you can use. The important thing, you'll realize this by the end of the video, is to have actual entries. Now in this case, let's say we got involved here on our shooting star, hammer candlestick. I keep confusing those two. Hammer candlestick right there that we just circled. If we got involved there, I'll place an order there. And if we did get involved there, for me, a great stop loss that I like to use is a 1 ATR stop loss below an entry candle. So 36 pips is the current ATR on that entry. So we would go right there. We have about 40 pips, 40 plus 36, let's just do that. It's going to be 76 pips. 76 pips is the stop loss, which you can see did not get hit. And the reason I love these types of trades is because you're looking for trend continuation on a daily chart, meaning you can capture massive reward, massive amount of pips out of this, and you're placing your trade on a lower time frame like the 4-hour or 1-hour chart. With that being the case, you can set yourself up with a very positive risk reward profile and end up getting really big rewards out of these trades. Let's say you place your target just at previous resistance on this specific case, in this specific trade, it would be almost a 3-to-1 risk reward on this trade. And that is the process. That's an idea for stops, an idea for targets, and an idea for some of the entry reasons you can use, along with the stars aligning through the conditions we used. Let's name them off one more time. Condition number 1, daily chart or higher time frame chart must be in a trend, either up or down. Condition number 2, you are looking to create a zone out of the most previous level, and let's go through this on the chart as well, that was broken. So we have our trending market, boom, 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 1, 2, 3. We have our previous level that had just been broken right here. We create a zone out of that previous level. Condition number 3, the market must pull back into that level. Once all of those conditions align, you have the stars aligning, you are ready to look for an entry reason. Whatever entry reason you want to pick is totally fine. I'm going to show you how to go through the market and validate this and actually start building a trading plan around it in just a second. But what you're going to do now is take and decide what entry reason you're going to use. After using that entry reason, you have a good idea of a way to place stops and targets. A way you could place stops is 1 ATR below that entry reason, and you can test many different ways of placing stops and targets using this specific strategy and system. But placing a 1 ATR stop below the entry candle will give you a pretty safe place to start with. That being the case, after that stop is already placed, and what you see is that we have rules in place before we ever even enter the trade. We already have rules for stops. We're not placing the trade and just on a hope and a prayer, hoping that we don't end up getting stopped out for a huge amount. We have a set risk and we have a set stop loss before we even enter the market. That is extremely important when it comes to trading success, at least in my case, and from what the trading that I've done, it has been. So being the case there, the next thing we want to look for is targets. You have multiple ways you can take targets. You can do multiple targets. You can do one target at a 1-to-1 risk reward along with the next target at a level of structure. That is for you to decide. Using levels of structure as targets is a great place to start, like we just discussed in this video. So at this point, with all of those being the case, you have the full system. You have the full system when it comes to the technical analysis, conditions, entries, stops, and targets. You are ready to go when it comes to the backtesting process and validating this system in historical data. So what we're going to do now is talk about how to do that. So how can we validate this system in historical data? What you will do is, we're on the daily chart now, is make sure that you are on the daily chart and in a trending situation like we are now. And we'll just start right here. So at this point right here, this is going to be our low. And what we're going to do is see, do we have a 1, 2, 3 move? Yes. Okay, we have a 1, 2, 3 move. And that 1, 2, 3 move actually happened right here. We got the break and close above right there. So that would be our 1, 2, 3. And then we keep going forward and higher. So what we have to do is, after that 1, 2, 3 move, let's draw that out one more time. 1, 2, 3. Where's our most previously broken level of structure in this uptrend? Right here. We just defined it as an uptrend with a 1, 2, 3 move, and our most previously broken level of structure is here. So our zone would look something like that. Let's do it with our horizontal line tool. Right there is our zone. And in order to backtest this, in order to validate this trading system, what I do is create my zone, and then I'll grab a line and I'll place a vertical line on the candle that breaks structure. That candle that breaks structure, I have the horizontal line, the vertical line there, because I know after this vertical line, I'm going to start looking for possible trading opportunities. And I do that over and over. The next 1, 2, 3 move we have, and the next move into structure is here, here, and up to here. With that being the case, our zone is going to be right there. So we'll draw that out with 2 horizontal lines. Our zone looks like this. And we'll go a little bit lower. So that is our next trading zone. And what candle breaks that trading zone? This one right here. So I know if I go back through historical data, you'll see why this is relevant, that I'm going to be trading and looking for trading opportunities in this zone after this after this vertical line. And then we're going to continue doing the same exact process. We have our 1, 2, 3. After that 1, 2, 3, our most recent level of resistance that was broken was right here. So with that being the case, we take a horizontal line, go a little bit above the wicks of those candles, a little bit below the bodies, and now we find the candle that broke that level of structure. It's right here. Now what we're going to do is drop down to a smaller time frame. This is how you verify the trading system. Go through historical data doing exactly what I just did. Then, if you want to do the same way I do it, I swing trade. I go from a daily chart to a 4-hour chart, or 1 hour if I don't see an entry on the 4-hour. But I'm dropping down to a 4-hour chart now. I know where my vertical lines are. I know where my horizontal lines are. So I know that this is the zone I'm looking for. I got to wait on my vertical line, though, to show me that, okay, on the daily chart, we have now broken above that level of structure. That's what this vertical line means. After we break above it, I know that I'm looking in this zone right here for possible trading opportunities. So I'm just going to move my chart sideways and look for possible trading opportunities. Now, right here, we did not get a possible trading opportunity on the 4-hour chart. So what I would do with this specific system that I'm teaching you right now is, instead of being here on the 4-hour chart, if I don't get an entry reason at all, I would go all the way down to a 1-hour chart. Let's do that now. So heading down to 1-hour chart, it's going to take a little bit of scrolling. Bear with me, bear with me. Here we are on that 1-hour chart. And there we go. We break that vertical line. Getting those confused as well today for some reason. We break that vertical line, we pull back, and remember, I'm waiting after the break of that vertical line for this zone to be hit. That's going to line the stars up for me to look for an entry reason. The zone gets hit right here, and as we push down, we get nothing until when? We push down here and we end up getting this very nice hammer candle at the bottom of our zone. The stars have aligned. We've gotten an entry reason. Now all that's left to do is place stops and targets. Let's say you use a hammer candlestick as your entry and you're an aggressive trader. You would just place a trade at the close of that hammer candlestick pattern. You would do a 1 ATR below the entry. If you are an aggressive trader, 24 pips below. 15 would be 35. 40 pips on the stop loss, around 41 pips. And again, multiple targets are possible. You could take targets at that previous resistance level, and just doing that would give you a 3.9 risk reward ratio. Hopefully now you're seeing the power of this. The reason this is so powerful is you're looking for trend continuation on higher time frames while looking for your stops and targets on lower time frames, and that gives you a very positive risk reward profile 90% of the time. So that was the first trade opportunity we had. Let's take a look at the next one. Remember, we have to wait. This is our new zone right here. And I will draw this out. This is our new zone, but we can't trade in it until we get the break and close on the daily chart, which is our vertical line. This is the importance of doing that in our backtesting scenario, in our validation scenario. So we get that, we get our vertical line. The market comes back down into that vertical line right here. At this point, as we push down, this is our zone right here. And in this area, what do you see? What do we end up getting? We get a push down, we get a 1 bottom, we get 2 bottoms right there. A nice double bottom scenario for entry, possible entry. Stops would be down here. Targets, again, could go back up at previous structure resistance right up here. Let's just play that out and see what it looks like on the chart. And this will be the last example I show you. On this time frame, we'll talk a little more about how to build a trading plan around this as well. You'd be looking somewhere around a 3-to-1 risk reward on this as well, on this specific trading opportunity from the hourly chart. Using that chart to place your entry, stops, and targets, while using the daily chart for possible conditions where it comes to, in a trending market for condition number 1, creating your zone for condition number 2, and pulling back to that zone for condition number 3. That's the stars aligning, looking for entries on 4-hour and 1-hour charts. So those are some examples of back testing the system, actually validating it for yourself. This is a process you will have to do. This is not optional. This is a mandatory process. If you plan to become a successful trader, you will not do so without doing the back testing process I just taught you how to do. I just taught you exactly how to back test this trading process, this trading system that you learned today. And if you do so, you will see the success it could provide you in your trading career. I hope you follow those instructions diligently. Now, when it comes to creating a full trading plan, the only things you're missing, you now have the system in place, you have your rules. Hopefully you've built the rules for your stops, targets, and entries. At that point, all you have to do to create a trading plan around this is figure out when you're going to trade, what times you're actually capable of being behind your computer, and creating a risk management plan. After those 2 steps, the process of creating your path to successful trading is complete. And I'm so happy to have been able to share this with you. I hope it helps you create success in your own trading career. If you want me to do some of this work for you, if you want to speed up this process of you creating a successful career, I'll put some testimonials on the chart for the Pro Trader Report. In the Pro Trader Report, I'll also put a couple of examples of the Pro Trader Report up, like the one we did for the Euro New Zealand last week. This program costs less than a tank of gas in a car. And what I do is send you my top 3 to 5 trading opportunity zones for every single week. So every single Monday, you'll receive my top 3 to 5 trading opportunity zones, and that will be highly beneficial. I'm sure you can see how beneficial that would be. And also, you'll get a full training course that goes over in much more detail exactly what we talked about today when it comes to the process, the trading system behind the optimal trading zones, behind the 3 times tested zones of structure that I use so often in my trading to create success. So to get all of that, to get access to all of that for less than the price of a tank of gas in a car, learn more about it by clicking the link in the description labeled Pro Trader Report. You'll land on a page that'll teach you a little more about exactly what the Pro Trader Report is included in that program, exactly what's included in there. So if you're interested in that, make sure to take a look at it by clicking the link in the description. If not, that's totally fine. No big deal. Make sure to follow us on the socials. Instagram and Facebook links are in the description. Make sure you're subscribed here. If this was beneficial for you, please click that like button to help support the channel. I wish you the best of luck in all your future trades, and I'll talk to you in the next video.